You are welcome to Unit 6, Section 4. We have considered some aspects of value-added tax, such as taxable supply, supply of goods and services, and exempt supply. In this session, we will be looking at zero-rated supplies, mixed supplies, relief supplies, and VAT registration. By the end of the session, you should be able to distinguish between exempt supply and zero-rated supply, explain mixed supply, and describe the VAT invoice. We start with the zero-rated supply. A zero-rated supply is a supply taxable at a zero rate, resulting in no tax being charged to the buyer. So here, the rate is 0% on the taxable supply. From the zero tax on sales, the trader dealing exclusively in zero-rated supply must deduct input tax, ending up with a claim on the VAT service equal to the VAT paid on input. Here, the taxable person is required to obtain and retain the documentary proof that is acceptable to the Commissioner General and that substantiates the person's entitlement to apply the zero rate to the supply. Let us look at some supplies that are zero rated. Under the VAT Act 2013, Act 870, the following supplies destined for consumption outside territorial boundaries of Ghana are zero rated. We have export of taxable goods and services. We also have goods shipped as stores on vessels and aircraft leaving the territories of Ghana. Let us look at the difference between zero-rated and exempt supply. In the previous session, that is session 3, we looked at exempt supplies and we said that exempt supplies are supplies that do not attract any VAT, even when sold or supplied by a VAT registered person. So let us look at the differences. Under exempt supply, transactions are not taxable. Under zero-rated, transactions are taxable and the rate is 0%. Exempt supplies fall outside the scope of VAT, while zero-rated supplies fall in the scope of VAT. Dealers in exempt supplies cannot recover any input tax incurred, while dealers in zero-rated supplies may recover input taxes incurred. Also, exempt supplies may involve local and foreign supplies, while zero-rated supplies are generally deemed to be consumed outside Ghana. Let us look at mixed supply. In Ghana, the concept of mixed supply is also covered by the VAT Act 2013 870. According to the Act, a mixed supply is a combination of taxable and exempt supplies, or a combination of taxable supplies of different categories. In Ghana, VAT is levied on the value of taxable supplies of goods and services made in the course of forbearance of a business. In our previous session, we learned that a taxable supply is any supply of goods or services made in the course of forbearance of a business that is not exempt from VAT. In the case of a mixed supply, the VAT treatment of the supply will depend on the predominant character of the supply. The predominant character is determined by looking at the relative value of the taxable and exempt components of the supply, and the components that constitute the greater part of the supply is considered to be the predominant character of the supply. So, for example, If a company provides a service that includes both taxable and exempt components, the VAT treatment of the supply will depend on the relative value of each component. If the taxable component constitutes the greater part of the supply, the entire supply will be considered taxable supply. On the other hand, if the exempt components constitute a greater part of the supply, the entire supply will be considered an exempt supply. Let us look at composite supply. A composite supply is a supply made by a taxable person to a recipient consisting of two or more taxable supplies of goods or services. For example, if a company provides a package that includes both a taxable service and a taxable good, and the service and the good are supplied together in a single package in the ordinary course of the business, the supply would be considered a composite supply for VAT purposes. The VAT treatment of a composite supply also depends on the predominant character of the supply. It is important to note that the concept of composite supply is similar to the concept of mixed supply, but there is a difference between the two. While a mixed supply can include both taxable and exempt components, a composite supply consists only of taxable supplies of goods or services that are naturally bundled and supplied in conjunction with each other. Relief supply. A supply is said to be a relief supply if the transaction is taxable under the normal rules, but the status of the taxpayer makes it effectively zero-rated. The beneficiaries of relief under the law include the President of the Republic of Ghana, Commonwealth foreign embassies and missions, other international agencies subject to agreement with the Government of Ghana, and lastly, emergency relief items approved by Parliament. Registration of VAT. VAT is collected only by businesses registered as agents to collect VAT on behalf of the service. However, not every business qualifies to be registered to charge VAT. To be registered for VAT, your business must be within the acceptable threshold. You must also have a permanent place of business and deal in taxable goods. To register for VAT, you must obtain a tax identification number, which is the TIN. You must also fill the VAT registration form. After filling the VAT registration form, you attach copies of your business registration document. After that, you submit these forms at the nearest Domestic Tax Revenue Division office. A VAT certificate will then be generated for you. This must be displayed at your business premises. You will also need to buy VAT invoice to issue to your taxpayers. We'll look at the invoice shortly. The VAT Act imposes some categories of business all obligations to charge the tax. So this is compulsory registration. We have manufacturers, for example, manufacturers of soap, cement, etc. We have service providers. Under this, we can have laundry, communication service, etc. Then we have wholesalers. Then we have retailers with taxable supplies of 200,000 Ghana cedis or more within a 12-month period. The government proposed a review of the existing VAT registration threshold of 200,000 Ghana cedis in the 2023 budget. A retailer may still register to charge VAT even if the amount is below 200,000 Ghana cedis. This is voluntary registration. You will only be permitted when the Commissioner General is satisfied that the retailer has no fixed place of business, has a reasonable grounds to believe that the person may not keep proper books of account or may not submit regular and reliable tax returns as required or is not fit to be registered. Traders dealing exclusively in exempt supplies are not required to register for VAT. Certain groups of people are required to register for VAT even if their business is less than or below the threshold of 200,000 Ghana cedis. These are promoters of public entertainment, an auctioneer, a national, regional, local, or other authority or body which carries on any taxable activity. Let us look at the sanction for failure to register for VAT. A person who fails to apply for registration is liable to penalty of not more than 2 times the amount of tax on taxable supplies payable from the time the person is required to apply for registration until the person files an application for registration with the Commissioner General. Let us look at the tax invoice. VAT registered businesses need to charge the tax on all sales that are taxable under VAT law. The VAT registered person is required by VAT to issue a tax invoice in duplicate for every taxable supply made. The original is given to the buyer and the duplicate retained in the booklet. I believe we have all seen a VAT invoice before. The VAT invoice is a document showing information of the supply of taxable goods or taxable service to another person. The tax invoice is needed to reclaim input tax. So this is an example of the VAT invoice. So the invoice shows some information. We have the received from, which is the name of the person. So let's say Miss Nkrumah. We also have the sum. So we'll have the sum. So let's say 20,000 Ghana cedis only. In respect of, then we have the items. Then, so this is for hotel, guest houses, restaurants, and snacks. Other VAT invoices may look different. Okay, then we have the descriptions of the items and then the various amounts. Then the grand total will be here. We also have subtotal, the VAT, the NHIL, and this the two added together. Don't forget that with the passage of the amendment, the rate is now 15%. Okay, the rate is now 15%. So this total here has the total charge inclusive of the tax. So this brings us to the end of today's session. In today's section, we dealt with zero-rated supplies, mixed supplies, relief supplies, and VAT registration. Hope you enjoyed this session. Thank you.